On today's hot sheet, I'm discussing housing starts, the NAHB Homebuilder Survey, mortgage applications, and weekly unemployment. Today is Thursday, June 20th, 2024. I'm Byron Lazine, and the hot sheet starts now. Welcome into the live hot sheet here today. Let me know in the live chat which market you're tuning in from. Glad to be back after our break yesterday on Wednesday as markets were closed to celebrate Juneteenth. Glad to have you guys back as we close out the week. We do this show, if you're new, every Monday through Thursday that the markets are open, 9:30 on the East, 6:30 on the West. We start the show at 9:30 because that's when the markets open up. So yesterday was a quiet day with market and economic news, but we're right back into it today here on this Thursday. First off, we have a release this morning with monthly new residential construction data that came out. So we have building permits, housing starts, and housing completions. Okay. We'll give you that update here right now. Building permits come in at 1.386 million. Housing starts come in at 1.277 million. Housing completions come in over 1.5 million. Now, this is seasonally adjusted on the annual rate. Okay, so these are May's numbers, but not for the month of May. These are May's numbers seasonally adjusted for basically a rolling 12 months. We'll get the next release, obviously, in July, as we do every single month. If we look at where the trends are happening, completions trending down. Permits trending down. Permits maybe one of the sharpest drops here as of late that we've seen. So year over year, permits down, and completions year over year look about even, but down here as of late. Okay, permits, I'm not surprised to see permits being down. Cost of money is certainly high right now. It's very expensive for builders to go and put a product out there, and it's becoming more risky. When we talk about now to start every single week, we talk about inventory being up. Existing home sale inventory is heading up. That's a builder's competition. I actually expect permits to continue to move downward here over the next year. That would be my expectation. I could be wrong on that. But if existing home sale inventory is going to continue to go up, why would a builder want to compete with that at the rate that they've been building the last couple of years? Not that it's exceedingly high or anything, but we know builders have a much higher days on market, months of inventory right now than existing home sales. So privately owned housing starts in May were at a seasonally adjusted annual rate of 1.277 million. That's a 5.5% below revised April estimate of 1.352. So April's year over year annualized rate to May coming down 1.352 million to 1.277. So less housing starts in 30 days, almost 750,000 less annualized housing starts, 75,000 less in 30 days. Okay. This is also 19.3% below May 2023 rate of 1.583 million. Single family housing starts in May were at a rate of 982,000. That's 5.2% below the revised April figure of 1,036,000. The May rate for units with 5 units, buildings with 5 units or more, was 278,000. Okay. Completions in May was at the 1.5 million, 1.514. That's 8.4% below revised April estimate of 1.652. It is, though, completions 1% higher than last May. You would imagine builders want to hurry up and get these things done. A little tick higher than last year. Completions in May were at a rate for single family at just over 1 million, 8.5% below April. And the May rate for buildings with 5 units or more was 479,000. If you're in a market that deals with a lot of new inventory, you're going to want to probably pull some of these stats inside of BAMX. All of the stats are available for BAMX members each and every single day in the hot sheet show notes. They look like this. We have so many BAMX members that are copying and pasting this data and using it in their database, their follow-up, along with the daily charts. A little bit more information here on housing starts. We have authorizations in May. Single-family authorizations were at a rate of 949,000. That's 2.9% below April figure of 977. Authorizations being permits. Okay, so building permits down, housing starts down, completions a little bit up. Not surprised to see starts and permits, forward-thinking builders saying, hey, let's take a couple of these chips off the table. We've done well. We don't have to go all in just because we're on a good run the last few years. We're up. We're playing with other people's money right now. Let's take a few chips off the table. See, in poker, you've got to leave the table if you want to put those chips in your pocket. But this is a poker game where they can do what they want. They can take some of those chips off the table and actually put them in the pocket. It's like the blackjack table. You're having a good run. Put a few black chips in your pocket. Take your initial investment off the table and save it for later. That's what I think builders are going to start doing. That's what these early indications here in May look like to me. What else are builders thinking about? Well, we have the NAHB Homebuilder Survey. This was also just released. Okay. The high mortgage rates, as you can imagine, are a drag on builder confidence. It's a drag on buyer confidence. We saw that buyer confidence with the buyer sentiment report here recently was at the lowest level ever recorded, right? There's like less than 20% of people think now's a good time to buy a home. If that's what buyers think, well, how do builders think? They build homes for people to buy them. Builder confidence in the market for newly built single-family homes was 43 in June. This is on a scale of 100. That's down from 45 in May. So it dropped another 2 points, according to National Association of Home Builders. This is along with the Wells Fargo Housing Market Index. Okay. Again, here just released this week. I think it might have even been today. Yesterday was released. Yesterday on the holiday, they released it. This is the lowest reading since December 2023. Remember, last December, we were coming off of near 8% rates. I think we touched 8 for a day in October. November, rates got really high. Confidence went down in December. And then we came into this year and confidence went up now here before being back down to 43, lowest point since December of 2023. 29% of builders cut home prices in June to bolster sales. Okay, if they're seeing more inventory, existing home inventory hit the market, like we just talked about, then they're going to say, I need to get this sold quicker. I need to be on the earlier side of closing these deals. Remember, months of inventory for builders is over 6. 6 is a balanced market. So when we're talking about newly built homes, buyers are in control. It's why builders are more likely to do an incentive right now, either for the agent community or direct to the buyer. 29% of builders cut home prices in June to bolster sales, the highest share since January when we were coming off of that Q4. Okay, it's also up from 25% in May. So moving up from May to June over the last 30 days here in terms of builders cutting prices. The average price reduction held steady at 6% for the 12th straight month. So when they reduce, they're reducing on average 6% off of the sale price. Okay. Interesting number when you're thinking about maybe your own price reductions. It's an interesting nugget, especially if you sell in a market competing against newly priced homes. When you're talking to a seller about their price reduction or their price adjustment, well, we know that the builders right now are reducing on average 6% of the sales price. So you may want to throw that out as a data point for having somewhere to start. Hey, I know we've got to reduce our price. We've been on the market 40 days. We've had 2 open houses. We've only had 3 showings. We had 1 verbal offer that never came to fruition. But I don't want to go too low. I don't want to leave money on the table. This is what you'll hear from a seller. Well, let's take a look at it. Here are the 3 most recent sales. That was happening 2-3 months ago. We now have X amount more inventory. We know that the home builders in this market typically reduce by 6% when they do a reduction. We're not new. Based on our competition, based on the fact that new is coming down at 6%, maybe we should look at 8%, 9%. What does that number put us? Oh, it puts us just above the next category. Maybe we move down another 5 so that we can be in the lower search category where there's less competition, right? Use the data points, use the information to your advantage to speak articulately with knowledge about what's happening in the market. When you go regionally, here's how builders feel regionally. Northeast, they have the best feelings about because they build the least there, okay? And there's the least amount of inventory, 62 for builders in the Northeast. They don't have as much builder competition, and they don't have the existing home competition the rest of the country is seeing as of yet. They will. Midwest dropped 3 points to 47. The South, 3 points to 46. And the West posted a 2-point decline to 41. Okay. That's how builders are feeling regionally. NAHB Chairman Carl Harris says persistently high mortgage rates are keeping many prospective buyers on the sidelines. Home builders are also dealing with higher rates for construction and development loans, chronic labor shortages, and a dearth of buildable lots. Okay, why is the new home so expensive? If we continue to push people into college debt in this country, which has been a 40-year issue, and not into the trades when they don't belong in general studies because they're not a college thinker, they're not that type of person, and they'd be better suited making 6 figures in the trades, which they can easily do if they learn the right skills. Well, you know, this problem isn't going to go away. It's been 40 years of pushing people away from trades and into college debt in the country. It's one of the biggest scams this country has ever pulled off. We're going to continue to see chronic labor shortages in the trades, in building. Okay. The dearth of buildable lots not being, being a shortage on great lots. I mean, that's just kind of where we're at. Okay. People are going to have to move further away from the greatest locations if you want to have new, or they're going to, you have to be willing to tear down. Like here in where I'm sitting in Connecticut, anything they slap on with a historic home, you like can't even tear it down. I mean, it's these beautiful downtowns. It's like, it's half the downtown. I've always been a proponent of, I mean, I don't really want beams from 1776 when we started. I would tear those things down. A lot of people here disagree with me on that, but I think new and something that meets the moment is a little bit more desirable. The high mortgage rates aren't going away. And the higher rates for construction factor into why these have to be so costly. Development loans. These builders are taking a big risk. It's why, going back to when we just looked at the housing start numbers, I expect starts and applications to continue to tick down, not expedite down, but tick down, just based off of this bundle of issues. High development loans, higher rates for buyers, chronic labor shortage. Why take the risk? I've made a bunch of money the last 3 years. All those issues kind of grouped into one is why I would expect to see a continued slowdown there. Mortgage applications. We review this every single week. It's really important to see where the mortgage applications are coming in. What does future demand look like? When I'm talking to a seller and I'm pricing for this weekend and not 2 months ago, this is a number that factors in for me. Mortgage applications. How much demand is out there? Is there less demand or more demand today when we're pricing your home versus when we looked at the comps 2 months ago? I don't care if your neighbor got whatever they got 2 months ago, if there's only 40% of the buyers looking. There's only 60% of the buyers looking today. We need to speak to that market. 2 months ago market might not be here anymore. Mortgage applications on the overall increased 0.9% from 1 week earlier, according to MBA. That's great, but what did the purchase do? The seasonally adjusted purchase index actually increased 2% from 1 week earlier. That's now 2 weeks in a row. Okay, we're 12% lower than the same week 1 year ago. I've got it. We're not going to make the case that we have the same amount of demand that we had last year. That'd be a silly case to make. We have essentially the same amount of home sales this year with 200,000+ more existing homes on the market right now. And, we're not seeing more home sales. Okay. So to say that we have the same amount of demand would be silly. This 12% number is right on the money. Okay. 12% less homes or mortgage applications right now, year over year. But the last 2 weeks were up a tick. Okay. So the last 2 weeks, we're getting a little bit of this summer push. Okay. Maybe we're on the other side of the distraction. Maybe the rate coming down from 7.25% to 7% has given us a little bit of momentum, just a little bit. Maybe an eighth tank of gas we've got here. We'll use it. And then hopefully we can get some more gas later on. Hopefully we don't go back to 7.25% and 7.5%. Not predicting that. I'm just hoping that. Here's the mortgage application index here. We're at the lowest point on mortgage demand since 1995. That's where we've been hanging around. This is lower than the demand we saw in 10, 11, 12, 13, 14, 15 when we were coming out of the great financial crisis. Many of those years we had ridiculously high unemployment, which we do not have right now, yet we have lower demand for mortgages. Okay, that's the demand. When we look at mortgage applications, that's the demand in the moment. That's the demand we have right now for the next 60, 90 days. It doesn't mean that there's a lot of demand not pent up on the sidelines. Of course there is. There's a lot of demand on the sidelines, but they're continuing to wait for the rates. I still think this is an easy objection to handle if you talk to enough people. Hey, I'm waiting for the rates to come down. Really? Why would you do that? Well, I want to get a better deal on my purchase. Well, I bet there's a bunch of people a bit like you who are also waiting for the rates to come down. Yeah, I guess there probably are. What's your experience when more people enter the market with prices? Well, I guess prices would go up. Okay. Or competition certainly goes up, and you're competing with other offers, other terms. Are you using a mortgage, or if the rates come down in a year, would you be going cash? No, I'd still be using a mortgage. Ooh. Can I tell you why that concerns me in a competitive situation? You're going to be competing with, if you're competing with 10 offers, somebody's going to be cash in there. The numbers tell us 40% of them. The 40% of people buy their home cash. Here's the refinance chart, lowest level since 2000. So doing a little better than the purchase chart there. Okay, there's your weekly numbers on mortgage application. Unemployment, it's got a lot of people paying attention to it every single week right now. The advanced figure for seasonally adjusted initial claims was 238,000. That's a decrease of 5,000 from the previous revised level, up 1,000 from 242 to 243. That was the revision last week. You do see a trend here, though, starting to tick up on unemployment. Okay. That could be good for rates. I'm not rooting for people to lose their job. I'm just saying that could be good for rates long term. You see some job loss here in the market. There will be pressure from Congress to the Fed to lower that rate. You already have some folks in Congress putting pressure on now. You start to see unemployment tick up in an election year, you will have a ton of pressure to go ahead and start lowering those rates. And remember, it's in alignment with how the Fed can start cutting rates. Their mandate from Congress is simply two things: get inflation down, 2% target, maximize employment. You start seeing unemployment tick up. Now we're far away from that right now, right? We're still, pretty normal, pretty strong there on unemployment, historically strong for sure. But that number is starting to tick up, and you are seeing more examples of that in headlines as well. All right. 10-year treasury is up as of 8:30 this morning, kind of bumped up a little bit to 4.281. What are the markets doing here? We got the Dow is up, start the day. S&P's up, NASDAQ is up. S&P rises to fresh record. NVIDIA, anybody own NVIDIA? Congratulations to you if you do. 30-year fix yesterday came in at 7.02. So we've kind of been just hanging around that 7 number now for 5 straight readings. We're in the high 6.9s, then 7.04, then yesterday 7.02. We'll get the weekly number updated here today, later today as well. Came in at 6.95 last week, probably be closer to 7, but it's been coming in at 7 the last 3 weeks in a row. The Freddie Mac 30-year fix weekly. The NBA weekly right now is in at 7.02. So kind of just hanging strong at 7. It'd be fine if we get that consistency and we're not bouncing up to 7.5 and we see 2 weeks of mortgage applications drop and we're, bouncing all over the place. I mean, hey, if we're going to stay at 7, now we know what it is. We lock it in and we go from there. All right. There you go. That's your hot sheet for the week. Appreciate you. Love for you to subscribe here to the BAM YouTube channel. Hit the notification bell down below. If you listen to the replay on Apple or Spotify, love for you to consider leaving a review on either of those 2 platforms. Really appreciate you and would love to see you grab your early bird ticket for BAM Mania, circa Las Vegas on October the 18th. October the 17th, that Thursday, we are doing an exclusive VIP portion of the conference. Okay, so VIP on the 17th, we will have a cocktail reception as well as your sign up, your registration. Later that day on Thursday, everybody will be invited to that. And then all day Friday, October the 18th. Right now, we are still in early bird pricing. There are more speakers to be announced, and there is a higher price coming very soon. Grab your early bird pricing opportunity today for BAM Mania. If you want to be an agent of change, be on the forefront of everything that is taking shape in this industry, make sure you grab your seat at BAM Mania. BAMX members, you get 25% off. There is a personalized discount code for you to get your 25% off. If you need to find out what your code is, you can email me direct, byron@nowbam.com, and just put in the headline, BAMX member, need my BAM Mania code, and I'll get you connected on that. Love to see you and hang out with you at Circa Las Vegas. Look up Circa Las Vegas. The venue is absolutely stunning. All right, have a great Thursday, folks. Tomorrow we'll have a brand new Knowledge Brokers podcast up over on @Knowledge Brokers Podcast, and looking forward to seeing you in all of the comments as always. Until then, toodaloo.